So a lot of people look at you on Shark Tank as this mean, cold-hearted person. I mean, when I told my mom that I was doing this interview, she's like, "Oh, you're interviewing the mean person." And so I want to ask you, are you this person with a cold ice heart, or are you a big teddy bear that people just don't see on Shark Tank?
Well, I'm the only shark that tells the truth. I don't worry about your feelings. I worry about your money. And I think it's so disingenuous when, Barbara or Lori says, look, you go, you keep going, you keep mortgaging your house. I'm not going to invest in it, but I think what you're doing is just wonderful. I don't say that. I say your idea has no merit. It's going to go bankrupt. You're going to bankrupt your family. You're going to zero. It's a terrible idea. Why don't we deal with it right now? Why don't you take this behind the barn and shoot it and start something else? Because it's a horrible outcome for you if you completely put your family in debt because of your really horrific idea. Now, you may not want to hear that message, but it's still the truth. And if you think I'm bad, wait and see what happens in the real world afterwards. Bad ideas go to zero. Whether I tell you that or not, that's just a fact. So it's better that I just deal with the truth. And this again goes to something my mother taught me years ago. She said, always tell the truth and you'll never have to remember what you said. And that is why I do that. It's sort of, I don't have to remember the truth. It's going to be the truth when I told it to you, and it's going to be the truth 10 years from now. It's still the truth. If you lie to people, you're going to get caught in that lie and you're going to trash your relationships with them. So I'd rather just deal with the trauma right there and then they call me the mean one. I'm the nicest guy because I'm the only one telling you the truth. The only reason Barbara gets to the set each year is I buy her a new broom.
I love it. I love it. Well, you are my favorite shark. If that means anything to you. So the question I want to ask you now about Shark Tank, because you have been very tough on your negotiating deals. What is your biggest regret or kind of missed deal, would you say, on Shark Tank?
Well, you may not be surprised when I tell you this, but I don't have any regrets, and I'll tell you why. Because with Shark Tank, which is why it's, I think, so successful, we're going into our 13th season. I have no idea what's going to come through the door in the next 20 minutes. No idea. I don't get to see these deals first, but they're so incredible. Each year they get better, more unique. We have everything now. We have technology. We've got, consumer goods and services. We have mechanical products. We've got so much diversity in the opportunities that if I miss one, I know in a couple hours I'm going to get another one. I have no regrets. I've got a fantastic team. I've had really incredible outcomes. I still have the largest exit in Shark Tank history, the sale of Plated to Albertson, which was my deal for $320 million. Wow. Nobody's exited anything with that much before or ever since we started Shark Tank. So I'm pretty happy with the outcomes. And I've made plenty of mistakes. And so, they go to zero, and that's tragic too. I hate when that happens. But overall, I'm managing diversity in portfolio, which I think everybody should do. That's kind of the way it works. One of the reasons I became a shareholder in Start Engine, which is a company that funds with crowdfunding, equity crowdfunding, and I'm their paid spokesperson, is, listen, I don't want just one deal. You can go on to Start Engine and invest in 10 companies, put $100 into each one, because you don't know what the outcomes are going to be. It's so serendipitous. You need a portfolio. And that Start Engine has 400,000 investors plus. So that gets all the deals on their platform, and people look at them and shop like they're in a grocery store saying, I like that, I like that, I like that, I like that. I'm going to build a portfolio. They're products and services I understand. I'm going to diversify my risk. That's the whole idea of investing the way I do.
So when you say diversification, do you mean investing in multiple companies or across multiple different sectors? So some tech companies, some consumer goods companies, apparel companies. What does that mean?
Both. That's a very astute observation. I have diversification in both. I have investments in every sector. There's 11 sectors in our economy, and I have multiple companies in many sectors. And generally speaking, if you look at a portfolio of as many companies as I have, and you try and guess the winners, you'll never get it right. It's like trying to get the grid right in March Madness. The brackets you'll never solve for. You just don't know. You have to have diversification. And I urge people that are going to invest to make sure they don't just do one company. You just don't know what's going to happen.
I know you like nice things. And I know we talked about this earlier. You like nice watches, nice cameras, nice wines. When is it okay for somebody to now start splurging their money? I mean, we talk about, the state of a lot of people's finances right now, when is it okay for someone to go out and buy themselves a $10,000 watch or a new Gucci purse? When is that okay?
Again, I'm going back to the source of my mother's advice. She told me, and I use this philosophy in all the things I buy. When, that analogy of don't buy a lot of stuff, buy very little stuff, but what you do buy, make it very high quality and treat it like an investment in your head. So when I buy a very expensive watch, I'm extremely selective because I want that watch to appreciate. Now, I have many, many watches. I have a very large watch collection, but to me, it's an alternative asset. My watch collection is up 114% year over year because I buy very, very selective pieces, and I'm extremely fortunate to be part of that global watch community that when a Rolex or a Patek or Audemars Piguet or FP Journe or Omega, all these different watch brands, I'm very familiar with them because I'm a very active collector and I select my pieces. And, I'm wearing an AP right now. This watch is not an AP, this is an FP Journe actually. And this is a very rare piece that is up about 80% over last year. Wow. So I've owned it for 2 years. FP Journe is the living Picasso of the watch world. He only makes 900 watches a year. You have to be part of his society to petition to buy them. That may sound really corny, but I love to work with that company and, to build my calibers across all their different designs. He's noted for his absolutely crazy dials. I mean,
that's beautiful.
People look at this and say, how do you tell the time? I said, I don't tell the time with this. This is a piece of art. I use my phone to tell the time. It's always with me. This is and the whole point is this dial creates conversations. I remember I was flying to Dubai and a woman beside me getting on the plane said, that's crazy, that watch. How can you tell the time? I said, you're talking about this watch? We're now in a conversation. This watch has done its job. It's a piece of art and you're enjoying it and it's controversial for you. I think that's fantastic. That's why I own it. And by the way, it's up over, 80% this year in value. So all of that's in my head when I do that with guitars. I have a very large pen collection. There's companies like Montblanc which build certain pens for their collectors and they preview them years ahead. So if you find one you really like, and I like to buy number 13 out of 98 pens, and I have some extremely rare pieces, but they go up in value. That's my whole point. I don't buy junk. So if you think that way, there's nothing wrong with, splurging once in a while, but if you're strategically buying things that appreciate in value, you're actually investing and enjoying yourself at the same time. So, people come and look at my watch collection because I love to talk to the watch community, but I'm very, very strategic. Each dial is unique and has a story.
Interesting. How much did you pay for that watch?
Oh, this watch was probably, I'm going to guess, probably 60 or 70,000.
Wow. Yeah, I think the issue, so I talk about this a lot on our YouTube channel. The issue, the kind of concern that I have is when the stimulus checks go out, you have a $1,400 stimulus check go out, you see a line out the door at Gucci and Louis Vuitton. And we saw this exactly happen when the $600 check went out. Gucci started putting the $600 purchase on display. And you see a line out the door as soon as that stimulus check goes out. So,
that's tragic. What people should do is take at least half of that and invest it in themselves. You put that into an index fund and just let it appreciate over time. I mean, this is a once in a lifetime gift from the government. Why would you just piss it away? Why wouldn't you take I'd take all of it and invest it. Just forget about that money and let it accrue over the next 20, 30 years until you retire. You'll be so thankful you did that. I mean, I don't think I think they put too much money in the economy actually, because there's a lot of people who have full-time jobs that are getting these checks. Why we're doing that, I don't know, but if the decision's been made is my point. You should take this opportunity and invest it in yourself. You're not giving it away to somebody else. You're investing in yourself. That's the whole point.
Yeah, I mean, I think this is why a lot of people are looking at it like a K-shaped recovery. You have some people that are doing very well in this economy. They've benefited because of the pandemic, while others, not so much. But everyone is getting the money, whether you benefited or not. And it's really kind of creating a strange system in our economy.
No question. Very strange. And I think this is something we got to think about because it could be inflationary down the road. And you're starting to see that pick up when you watch the 10-year go from 0.9% to 1.7. That's pretty scary.
Are you worried about the long-term strength of the dollar, or you mentioned inflation? Do you think this is going to have a big impact on people's ability to afford life?
Well, I do worry about that. I mean, this is so overstimulating. And now we're talking today about another 3 trillion in infrastructure. That's really, really inflationary in my view. But again, diversification. I invest in Canadian dollars, American dollars, Swiss francs, euros, British pounds, and Bitcoin. I mean, and I have gold as well. I want diversity. That's the whole idea, because I don't know what's going to happen next. Will the dollar be up? Will Bitcoin be up? Will the euro outperform? Will the Swiss franc, which it's done before, become the fiat currency of choice? You just don't know. And that's why there's a lot of room. I would argue one thing about Bitcoin, which, I've spoken of many times now. When I made my declaration that I was going to 3% weighting, I got all these calls from institutions saying, do you know where your coin was mined? And I said, no. I've just bought Bitcoin. They said, well, we don't like coin mined in China or anywhere that's mined using coal to burn electricity, to make electricity. It's very pollutive. And so I think there's going to be distinction around sustainability around Bitcoin mining in the years ahead. So there'll be a premium for a clean coin, virgin coin, versus a blood coin from China.
Interesting. Very interesting. I actually didn't even know that. I'm glad you brought that up. So the last thing I want to go over today, we asked our audience, our viewers, what they would like to ask you. And so I have 5 questions from our audience.
Sure.
Question number 1 from Casey Burns 206 on Instagram. What is the most garbage investing advice you see out there on the internet?
It's the get rich quick day trading stuff. Again, there's nothing wrong with it if you treat it for what it is. It's almost entertainment, but it's not investing. It's really, really hard to do that and make money long term. Doesn't mean you don't learn from it, but it's not investing. So I see all that stuff all the time. Use leverage, borrow money to trade. That's crazy. I don't agree with that.
Number 2 is from Deepthi Rao on YouTube. What 3 keys would you give to a beginner investor who is 20 or 30 years old to start investing? Your 3 keys of investing.
The 3 keys, number 1, never more than 5%. Let's you build a portfolio with a minimum of 10 stocks in it. Never let any one of those stocks be more than, let me start from scratch on that one. Start with 25 stocks, because that's enough diversity, okay? And then never let any one stocks be more than 5% of the portfolio. Never let a sector like technology become more than 20%. And constantly keep trimming as one goes through the roof. If they have a Tesla and all of a sudden it's 10 or 20 or 30% of your portfolio, trim it back to 5. You still own Tesla, but you've taken a lot of profit, you've taken a lot of risk off the table, and you've got more capital to put to work in other stocks. So I kind of like portfolios in that 20 to 25 names, and then using those rules, 5% in any one stock, never more, and never more than 20% in any one sector. And then you get diversification. That's what I'd say. That's if you're going to pick stocks yourself. I much prefer to just pick exchange traded funds, ETFs. That's what I actually use, ETFs.
Awesome. You have an ETF yourself too, don't you?
I do. I have an ETF company. I'm very proud of it. That's why I have it.
Awesome. And next one from Instagram, Michael Sabanda 1. What should one do to impress a shark quickly?
Well, the best thing you can do is articulate your opportunity in 90 seconds or less. Learn to explain exactly what you can do in 90 seconds or less, because it's really about the opportunity. And then explain why you're the right person to execute on the idea, because there's a million great ideas and very few people can execute on them. Executional skills are rare. Great ideas are a dime a dozen. And lastly, know your numbers. If you get past the first 2 and you're on Shark Tank and you've got the lights on you and everybody wants to invest, and then you don't know your numbers, you deserve to burn in hell, and I'll put you there myself.
You tell the truth, always.
Exactly.
The most popular question I got, this was asked dozens of times, and I know we talked about it today, but we'll just kind of go over it quickly, was by page 22 on Instagram. What do you think of Bitcoin, crypto, and the future of Bitcoin? Is it going to crash, or is it going to take over our currency?
No, I think it's going to become a property, much like real estate or gold is. I'm not sure it's stable enough to be a currency. It's too volatile. For example, people won't take large payments in it most of the time because they don't know if it's going to be down 30% in the morning. But that may also resolve itself over time. Right now, the biggest issue around Bitcoin for institutions, because less than 5% of the institutions that could own it, is basically the regulator, which in most countries like Canada and Switzerland and France, New Zealand, in Europe and in England are starting to relax the rules around crypto because they know it's here to stay, or we speculate that. Canada has ETFs now with Bitcoin in it. And I think the US regulator will slowly move in that direction. But also this idea of sustainability. Most institutional investors have sustainability committees, ESG committees, compliant committees around, things like human rights and all that. And I agree with that. And so you have to be compliant. And so, coin-minded China, which is where the majority of Bitcoin is mined, is not made on a compliant basis. And so, that's an issue. And I think it's going to become more and more of an issue. So you're going to see virgin coin become more valuable because you can't tell the provenance of a coin. You don't know where it's been. You know when it was born, but you don't know if it was part of a nefarious, illegal scheme or whether it came from China or not. But that's why if you have the provenance and you know it's virgin, then it's more valuable. And I think that's going to occur. There's going to be two markets for Bitcoin. That's something to think about. So I've restructured my strategy. I'm investing in miners now themselves and then asking them to pay me in virgin coin. So if you're a miner and you want to expand your operations, come to me, I'll fund it, and then you'll pay me a royalty in virgin Bitcoin. And that's the kind of arrangement I'm building right now.
Royalties. Love it. You got to have royalties. Cash flow, as you like to call it. And number 5, from Mass Media on YouTube. Besides money, what keeps you motivated every day to get up and keep working instead of just being comfortable with where you are?
Well, I want to do things that keep me really stimulated. I'm very interested in engaging in entrepreneurship. I help many entrepreneurs. I'm very interested in photography. I'm very interested in recording music. I have a passion for wine. I have a very big wine business. I'm an investor in over 20 vineyards. And so these things are things that balance my life because I've always said the best managers in business have yin and yang. They have the idea of the discipline of business, which is very binary. Either you make money or you lose money, but they also have the chaos of art. And that helps them become more creative as they try and solve business problems. The greatest managers I know have a little bit of both. They really enjoy something. They're passionate about music or they're passionate about, painting or something, but they're also great managers. So they can do the discipline of business along with the chaos of art, combining those talents. They're the people I tend to hire. I think they're great at sort of being masters of achieving things because they find different ways to do it. And you require some discipline in the arts to do that.